We're coming off one of the worst Januaries the stock market has seen in decades, which begs to ask the question, is now the time to buy or is now the time to sell? With most indexes down between 6 to 12%, should you buy the dip, hoping that you're buying a discounted rate of the index, or should you sell because stocks are going to continue to go down and down? Hey guys, I'm Tim Wolf. This channel is all about personal finance and helping you learn how to build wealth. If you are new here, please go ahead, hit the subscribe button. And if you get anything out of this video, please hit the thumbs up button. It helps out a lot. First things first is nobody knows the future. There's always headlines about whether the stocks are going to crash or people that have predicted shorting the stock market. But what you don't see is all the false predictions that those same exact people have made year after year after year. There's way more false predictions of whether the stocks are going to go up or down than there are correct predictions. 88% of professional finance fund managers lose to the S&P 500 every year. And if you happen to beat the S&P 500 for 1 year, your odds of making it 5 years in a row of continuously beating the S&P 500 is less than 1%. And these are fund managers who are paid specifically to try to predict what the stock market's going to do. So if they can't do it, what makes the average person think they can do it and predict the future? Because the data all shows that you simply can't. The number one reason why people lose money in the stock market is because they trade on emotions. Trading on emotions is when you lose. As an average investor, by the time you see headlines about stocks crashing or stocks rising or Bitcoin going up or crashing down, it's already too late for you to jump in and make massive profits or save massive losses. If you're seeing hype on social media about buying certain stocks and this stock's already been up 50%, it's already too late for you to buy in. And if you're seeing news headlines about stocks crashing, it's probably already too late to sell because the majority of the crash has already happened. At that point, you're trading on emotions, either out of the hype of what you see and you're buying as much as you can, or you're selling as much as you can because of the panic that you're feeling. During a stock market correction like we are right now, where the S&P moved down almost to 10% loss in January, the people that draw back and trade out of fear are the people that are going to lose the most. The people that steadily invest throughout are the people that are going to be just fine. So if you just missed the 10 best days of the S&P 500 over the last 10 years, that's proven to reduce your portfolio returns by 48%, almost half your portfolio, just by missing the 10 best days. And if you missed the 20 best days in the last decade, that's gonna reduce your portfolio gains by 66%, way more than half. And usually the best days in the stock market, as we're seeing right now, is usually after the worst times in the stock market. So if you see the stock market crashing, you see all the bad headlines, you start to pull out, know the best days are in the very near future. We've already seen it this year in January 2022. We've had one of the worst Januaries, but we've also had some of the best days for the S&P 500, gaining 2 to 3% in just a single day. Had you pulled back and traded and panic selled and then you missed those days, those are the days we're talking about that's going to reduce your returns. You haven't actually lost any money until you sell your stock. It is a roller coaster ride. You have to ride the ups and the downs, and the only people that get hurt on the roller coaster are people that jump off. Stocks are always crashing. Every year the S&P 500 goes through some form of a crash, yet every year the S&P 500 has averaged over a 10% return. Since 2010, there has been an average drop every year of 12.5%. Every single year the S&P 500 has averaged a crash of 12.5%. And year to date the S&P 500 is only down about 8%, so we're actually doing better this year than on average, which means we can have full belief the S&P 500 can rebound and we can still have a 10% plus year. And if we're talking about entering into a major crash, like the 2008 recession, for example, what are we looking at as far as how fast the S&P 500 is going to recover? And how are you going to be able to time it? In 2008, the S&P 500 crashed 57%. But it was able to recover in just 3.5 years and then entered into the longest bull market the S&P 500 has ever seen. In 2020, the S&P 500 crashed due to the COVID-19 pandemic by 34%, and it was able to recover from that in 3.5 months. And by the end of 2020, the S&P 500 was actually up 16%. I'll leave you with this thought from Warren Buffett. He said, be fearful when others are greedy and be greedy when others are fearful. So yes, I'm gonna say buy the dip and don't panic sell. Thanks for watching, guys. If you got anything out of this video at all, please go ahead, hit the subscribe button and the like button, and you can check out these videos that YouTube's gonna recommend for you to watch next.